G'day everyone, welcome back to Pete's Investing. Today's June the 9th, 2023. This is the NIKKEI Japanese market update. On a weekly we're showing a bullish bias, although it has weakened in the last few days. On the daily it's broken down into a neutral, hence that weakness, and there's a bit of a divergence happening, and I'll explain that as well. And on the hourly we've actually hit our short-term targets based on that on a different divergence. Looking at the weekly first, you can see there both the moving averages of the price chart and the moving averages of the CCI are still moving bullish, and that's giving us a bullish bias on the weekly. So predominantly bullish trades if you're going to do this and trade and making sure all three timelines align. On the daily, however, it's broken down into a neutral positioning, so avoid those bullish trades. This gives us a slightly earlier signal in terms of trend direction. You can see here I did have a still playing out actually a bearish divergence on the CCI versus a bullish divergence on the price chart, and these are our initial target areas in that Fibonacci range. That's between the 31,155 and down to the 35,85 as the initial target on the daily, and that's our secondary target right down to the 30,155. So that's a bit way off at the moment. It's giving us a bit of a bullish candle today. On the hourly, there was another divergence happening on the CCI, and that's actually played out, and we drew this last time from our last update, and our initial target for that one would have been the 38% at 31,915 in that little rectangle, down to the 50% at 31,672. So it did break below that, had you go on short, and it would have entered that area there, and our secondary target was also hit, and that was down to the 61 level at 31,428. It actually perfectly bounced off that 61% and bounced up from there. So that's always a key area to look out for, the 61%. If it had broken below that, we would have seen further declines. So that was a bounce from the 61, and it hit both our short-term and medium-term targets on the short side had you trade the hourly on that divergence alone. And also, if you zoom out, you can see there we've got the backtest, long program backtest and a short program backtest. And as I always say, always make sure you trade in the direction of the weekly and the daily to be more confident. So you can see there during those last few weeks, the weekly and the daily were showing long positions, so you would have traded. So that was back to around about March. So since that period there, in that increase, that bullish period, you would have traded long trades only. And likewise back here, you would have traded that period there, would have been very short, a few weeks trading short positions only. So that way you would have avoided going short more recently and avoided that drawdown. Likewise, early on you would have avoided those drawdowns as you traded the weekly and the daily as well. So to understand how to trade this and other trading strategies, reference the links in the description below. Subscribe to my Patreon page where we also look at stocks, currencies and commodity scans. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.